you're going through a white knuckle period. I think it goes back to like worries about circular financing.
Yep.
OpenAI too big to fail. If Oracle sneezes, the stock's down 2%. So it's sort of analysis of like how the build out looks out. Look, in my view, and we've talked about it so many times in the show, this is going to be an 8-10 year build out of the AI revolution. In that period, you're going to go through these moments. Then it's sort of prove it, what the use cases look like, what the spending looks like. And I think that's ultimately what this is. But in my opinion, this is the tech bull market has 2 more years left, and it's not the time to panic. These sell-offs create the opportunities. That continues to be our thesis.
So when investors start to take a closer look at an Oracle and really question whether it belongs up there, at least its share price movements belong up there with the Alphabets of the world and the Microsofts of the world, are they justified in identifying a weak link like Oracle? Does it ring true to you?
I think they're justified in terms of like why you'd separate out Oracle versus the others, because just given they've never really built out everything from a data center perspective. They're not a hyperscaler like a Microsoft, Google, or Amazon. But my view is you have 475 to 500 billion in deal flow, 300 billion of that being OpenAI, the next 5 years, 6 years. You're going to take on some debt. You are going to build that out given the opportunities. And I think that's going to be a thesis, right? And that's going to be a theme as we've seen with like Meta spending on CapEx. Investors don't like to see it. They want to see free cash flow EPS going up next year. But the reality is Zuck in wartime CEO mode focus on how do you monetize the 3 billion users over the coming years. And I think that is what we're going to see play out across, over in 2026.
How does OpenAI fund itself and all the money it's spending?
Yeah, I think, look, if you look at it today and you're like, how are they going to fund that much, 10, 15x of what they generate today? See, Paul, my view is you're going to look at a company over the next 5 to 10 years that the revenue and the monetization opportunity is probably 4 or 5x what they've already committed to. So if you take a longer term view over the next 8, 10 years, what they can do, I think it's ultimately, given the centerpiece that they're going to play in AI, the monetization is going to be there and more. So I don't view it as like are they making big bets? Yeah, and it looks like they could be making another bet with Amazon. But for them, they're more than just an LLM model. They're trying to build out the stack. They're trying to be in Microsoft, be in Amazon. And I think if you look, that ultimately is their vision, and the deal flow ultimately, I think that supports it.
Will they get there?
I think they're going to get there, and probably they're going to get there more accelerated than investors even are anticipating. It speaks to my view, like when you think about like IPOs, let's say SpaceX going IPO next year. If I told you 2 years ago SpaceX is going to go IPO, you'd be like, well, no, like, I'm just giving all the doubt. You go back, I mean, you've talked about it. If you go back earlier this year, New York City cab drivers bearish on Google, AI destroying their business model, DOJ is going to break them up. That right now they're just going through a gut check moment. But when you look at the AI revolution, for the first time in 30 years, U.S. is ahead of China when it comes to tech. This is the time, it's go mode, fifth gear, not the time to be right lane going 45 miles an hour. And I think that continues to be sort of the issue right now in terms of what we see with tech. And investors clearly are a little sort of wheezy relative to what we see play out.
It seemed like Elon's got his mojo back. Tesla back to an all-time high. Again, SpaceX valuation, the valuation numbers out there are just extraordinary.
Never mind what's happening with Tesla vehicles.
Exactly. So what is, that goes right to your point, what is a Tesla story these days?
But
That's what you've been talking about.
But to your point, it's like, okay, because it's like ultimately deliveries and vehicles that fund the business. And then anyone that's in the stock today, it's all about autonomous and robotic, because the view is like, look, when it comes to physical AI, the two best physical AI plays in the market, it's NVIDIA and then it's Tesla. Now, is this a gut check moment for them? Of course, they got to show 30 cities. You got to need robotaxis 2026. You need to have actually volume production when it comes to what we see with cyber cabs. But in my opinion, this will be a historical year for Tesla. Like I think at the end of the year, Tesla base case 600, bull case $800.
Okay, you are notoriously bullish on all things AI. What worries you, Dan? What makes you pause? What makes you think maybe we won't get there?
Look, the biggest thing that worries me, it's not articles that talk about, Oracle, they're going to be able to build out data centers. It's not circular financing. My biggest worry, it's energy. Because the reality is like China is way ahead where the U.S. is when it comes to energy, nuclear build out. Right now, 3% of companies have gone down the AI path in the U.S. When you get to 20%, it's not enough energy. So, and I think nuclear is going to continue to really be the answer. But that's the biggest thing that stops us is purely the energy.